Oil has risen to 6-month highs. How can you trade this on IG.com? Well, IG has all the big oil companies on the platform, the producers, the explorers, and the oil field service operators. Also here, you can also trade the sectors as well, the oil producers, then the oil field service companies as well in two separate sectors. But with the big fall off in oil since June 2013, there's been a spectacular percentage rise from the lows that we saw in January this year. Let's take a look at the chart of US Crude first of all to see just exactly where the rise has come from as we look at this chart, which goes down, as I said, spectacularly in one direction. But since the beginning of this year, we have seen this rise here. And it's a rise that looks like it's got legs. We're just up against a point of resistance at $48.35 on US Crude. This is a daily chart. Just an hourly chart shows you a little bit more about what's happening and how we've bumped up against that point. And we continue to do so on the hourly chart. We've just come back down from overbought on US Crude. So that's one chart to trade. When we get a little bit of a pullback, potentially there is more upside to go. Let's take a look at Brent Crude. Very similar sort of move down and similar sort of move up. We've got this nice channel being produced here. We're just almost at overbought. Not quite at the top of the channel on the daily chart. The hourly chart you can see in some more detail precisely where we are, and the fact that we have been just over that, just touching it over it and then coming back down again. We've got this drop back in the last hour or so as at mid-morning on Tuesday. Look at that big pullback in the overbought position, so potentially more upside to go now from crude depending on where we close out this hour's trade. We do have support coming up from these moving averages, but Brent looking like US Crude as though potentially it has got more upside, but possibly a little bit of a breather to come. Let's take a look at some of the sectors I was talking about. This is the oil equipment and service sector. These are the companies that own the picks and shovels, the guys that do the drilling, the guys that support these large oil companies. Now, we've seen this big pullback in this particular sector, but there's not been that much of a rise. We're getting a little bit of tension building up here as the chart becomes more and more intensely organized around the 135.85 level on the oil field services sector. So that's one waiting for a breakout. Could it be on the upside? Well, certainly if more upside to oil comes, then more of these oil companies will be called in, the oil equipment services companies will be called in to do more analysis of data, more drilling, and this has been they've really been on the back burner so far as some of the projects are concerned. But if oil continues to rise, then these big oil companies will see a continued upthrust in their activity, and this is really going to come through in these oil field service companies. Now, oil and gas producers have had more of a lift than the oil field services boys, and you can see on this side here, we've got this long-term trend line here that's been broken. It was broken back on the 12th of April, and it stayed above that line significantly, and it's now riding on this upward shifting line here. This is the oil and gas producers sectors on the FTSE 350. So this gives you exposure to those large players in that particular sector. Let's take a look at some of the individual companies that we've been following recently. Royal Dutch Shell still swallowing that great big M&A deal it did with BG Group, but the company looking to sell off some of its assets now as it wants to refine itself onto its major parts of the business. Royal Dutch Shell at the moment trading at 17.60, and there is potential upside here for Royal Dutch Shell. On the daily chart, you can see there that there is this move down at the moment, but we're into this peak of this triangle here that we're developing. We are slightly overbought at these levels at the top of this point here, but any downside, potentially we could well see a return to performance. If the oil price continues to go up, we will see Shell break this upper line here, and that potentially then is the point at which we could see more money going back into Shell for this stock. Just one final chart I want to bring up, and that is Exxon Mobil, the world's largest oil company. This has risen a fair bit since the lows that we saw middle of last year, but the lows that we saw at the beginning of this year to where we are now, this is up a quarter, 25%. Not as much as the oil price itself, but that looking as though it's a very healthy chart picture. That is a trend that you don't want to get the wrong side of. A little bit of consolidation going on here at the moment for Exxon Mobil, and where we are consolidating, coincides with some previous consolidation that we saw back this time last year for Exxon Mobil. It's been support before, it's been resistance, it's resistance now at these levels. Will we rise above this? Quick snapshot of the hourly chart to give you an indication as to what the trade has been like this morning. We are back in trade. This is an all-session stock on the IG platform. Has been up, it's pulled back a little bit, but resting at the support level at $89.24. That's a snapshot of some of the stocks and some of the sectors to watch out for on the IG platform. Do remember that losses can exceed deposits, and put your stops in place if you go for a spade bet trade.